Welcome to the daily insights that matter. The output of India's 8 core sectors rose by 7.8% in January 2023 against a growth of 4% seen in the same month last year. Let's discuss this. So what are the core sector industries? The core sector index is an index of the 8 most fundamental industrial sectors of the Indian economy, and it maps the volume of production in these industries. These sectors have significant links with other industries and therefore have the capability to strongly impact the Indian economy collectively. The core sector number normally has a larger ramification for the index of industrial production and GDP growth. The 8 core sectors comprise almost 40% of the weightage in the index of industrial production, which is an index to track the manufacturing activity in different sectors of the economy. In January, apart from crude oil, all the other sectors witnessed a growth for the second consecutive month, indicating a broad-based industrial recovery. Between April 2022 and Jan 2023, the core sector has recorded a growth rate of 7.9% compared to the year-ago period. A growth in the core sector's output for the third straight month, which was November at 5.7%, December at 7%, and now January at 7.8%, clearly shows that the growth momentum of infrastructure is recovering quite rapidly. In contrast, the output of the 8 major sectors had declined to 0.7% in October 2022. Rising domestic demand, easing inflation, and the government's emphasis on the infrastructural development contributed significantly to increasing the production of the core sectors. Going forward, along with all these factors, the significant capex push by the government announced in the recent budget bodes well for the core sectors. The Purchasing Managers Index is an economic indicator that measures the performance of the manufacturing sector. It is based on a survey of purchasing managers who are asked to rate the relative level of business conditions, including employment, production, new orders, prices, inventories, etc. A reading above 50 indicates expansion in activity, while below 50 is a sign of contraction. The S&P Global Manufacturing Purchases Managers Index slipped from 55.4 in January to 55.3 in February. The manufacturing sector expanded at the slowest pace in the last 4 months. Though it slipped, it was still above its long-run average of 53.7. India's manufacturing sector sustained robust growth of output and new orders through the last quarter, although there was a noticeable slowdown in the rate of international orders. Additionally, input cost inflation rose to a 4-month high, but there was a softer upturn in selling prices. The domestic market was the main source of business growth, as orders from export-related countries increased fractionally. Comparing it with the global peers, India has seen the best numbers in the manufacturing sector. Though it slipped by a meager amount, India has been in the expansion mode predominantly due to its domestic orders. While the PMI moderated in February, there has been continuation of improved overall operating conditions for the 20th consecutive month, despite macroeconomic headwinds. Despite some loss of growth momentum, the sector is likely to remain in expansion mode as the current fiscal year comes to a close. So what does all of these news mean for you? So far in the fiscal year 23, the economic recovery in the country has been facing multiple headwinds, such as high inflation, rising interest rates, and supply chain constraints. However, the Indian economy has stayed resilient and is moving in the right direction, which is evident from the recovery seen in the core sector output. This will have an indirect positive impact on you. While the global outlook is deteriorating and very uncertain, Indian manufacturers are confident in their ability to lift production from present levels. The increased activity also indicates resilient demand despite global challenges, but the macroeconomic headwinds will still remain a pain. This will have an indirect positive impact on you. So while I say this is me, Rahul Hassan, signing off. Take care and stay safe.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.